India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Monday morning, bright and early. Lots of stuff to react to. More local than global, I dare say. But there is, that global overlay as well, which I'm not very sure is as positive. So let's get the ball rolling. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning Nigel, morning Prashant. Prashant, with Donald Trump being the president-elect, can you think there'll be less global stuff to talk about? We'll always have a headline. I have one, which I'll get to in just a bit.
Well, plenty to look forward to in this week itself. We'll have the jobs data coming out of the United States. End of the week, you'll have the RBI decision. And the big one for us here at CNBC TV 18, our birthday celebrations as well. So plenty to look forward to all through the week and on the weekend as well.
What's on the weekend?
The India Business Leader Awards.
Oh, Saturday. Oh, yes. I thought it was, okay, of course. All right, well, let's just quickly get the ball rolling and tell you what you need to know. And, usually, of course, I start with the U.S. market session and what happened, etc. But, U.S. largely, because Thursday was a market holiday, Friday was a shortened trading session. It was very much to talk about. So let's start with the GDP numbers. We got a big miss, a bit of a shocker. And if you are on social media or on X, Twitter, etc., hashtag GDP shocker was trending, right? And it was a bit of a shocker because growth fell to the 5% handle. And third quarter numbers have come in at a 7-quarter low. I think generally, if you looked at corporate earnings expectations, etc., and we sort of put that piece out towards the fag end of the second quarter, which showed that 66% of companies on the NSE 200 which have reported have seen earnings cuts. It's the largest downgrade since 2020. So the market, from a stock market perspective, a lot of it perhaps was anticipated. It's just that while the direction of travel was clear, which is that the growth will slow down and perhaps numbers will show that, the fact that you are now 5 point something as far as the numbers concerned on GDP, I think that was really the shocker. Now, there is widespread acknowledgement that there are two factors responsible: slower government spending, and market guess, etc. And we've kind of debated this and sort of talked about this quite a bit. That is number one. That perhaps will pick up in H2. It must pick up in H2. And the second, of course, is bank credit, which has slowed down quite a bit. These are the two factors which has led to slowdown on the government spending. Number one, and second, bank credit, which is, of course, directly related to personal consumption, which has also come off quite a bit. And both are expected to pick up in H2. So that's essentially what I want to put out. Now, just a couple of more points. If you read through and we put this out, what the street expectations from what the RBI will do, should do, etc., that is on the 6th of December, on Friday, that has gone up sharply. Not in terms of an outright rate cut, because, maybe their hands are tied because of CPI, etc., but maybe ease liquidity in the system, a CRR cut, etc., etc. We'll see. But the RBI itself will perhaps lower their full-year growth guidance, etc. But I think this now becomes the big big talking point all the way into Friday. But if you're just trying to sort of extrapolate the sharp slowdown to market and what the stock market will do this morning, I think you need to be careful because you've got, as I said, the street already knew that growth is slowing because of the corporate earnings, which have disappointed quite a bit. If you look at full year FY25 Nifty earnings or, the NSE 200 earnings expectations, they're all in the single digits now, 9-10% kind of growth. The bigger thing, of course, which I think we'll talk about, and Lata will join us a little later as well, is that nominal growth is also now slowed to about 8%. Remember, that is important for corporate profits, not real growth, but nominal growth, and that is now tracking at about 8%. I'm sure we'll hear more about this. Just one point from the global arena, and this, of course, as Surabhi was pointing out, is Donald Trump and his tweet early Saturday morning for us here, in which he clearly pushed back against the de-dollarization, which is being pushed forward by countries like China the BRICS countries essentially. And he threatened 100% tariffs on sort of countries which are part of BRICS. BRICS, by the way, is not just, the earlier group of countries, 5 countries. I mean, they've extended membership now. But he's threatened 100% tariffs on countries if they sort of try to diversify away from dollar as a financing currency or a reserve currency. Again, I mean, what does this do? I mean, I think for the rupee, maybe it is a bit of a negative because the rupee largely, in India, largely was seen as a non-tariff sort of, a currency which is not really hit by whatever Mr. Trump wants to do in terms of tariffs, etc. But him sort of very clearly putting this out there maybe increases the risk premium for BRICS currencies, not in focus as tariff trades, especially currencies like the INR. We'll see what the rupee does this morning. But I think what it also shows is the willingness of Mr. Trump to use tariffs as a tool to get what he wants. I mean, I think that has been clear, but this kind of just sort of showcases it, and he's not even taken charge as of yet. I'll just get straight to levels here before we go any further. I think on the Nifty, we need a break above the high, the recent high, which I think we've been knocking at for 5 days in a row now, 24,351. We're about 200, less than 200 points away from that. And of course, above that, we look at the retracement levels, etc. Support levels will come up on your screen. That stands at about 23,873. For the Nifty Bank, levels will come up. Again, similarly, I mean, the recent high and the recent low are those levels. Resistance stands at 52,760 and supports come in at about 51,759 or so. GIFT Nifty will come up on your screen. I checked about 60 minutes ago. I think it was indicating a slightly higher start, 30 points higher. Surbhi.
Well, Prashant, you've pretty much covered it, all the points that I was going to talk about. But just to go into some of these details over here, if we just look at some of the additional data points we're getting from the Asian region this morning, the PMI numbers from China are looking very, very good. Both the Caixin PMI numbers, manufacturing numbers, as well as the official manufacturing PMI from Asia. The numbers are above expectations. The expansion is continuing in November, so that's good news. And some of the Asian markets are continuing to move higher. Remember, of course, US markets also managed to close off positive in what was a shorter sort of trading session on Friday because of the Thanksgiving holiday. So global equity markets are going about their business. Now, let's just put the Trump tweet in focus. The tweet where, the US president is very clearly talking about, a bit of a deterrent to the BRICS, saying that, no one should think that there can be a BRICS currency replacing the dollar. He's saying that any country that tries this should wave goodbye to America, so on and so forth. They can go on and find another sucker. So it's a very colorful tweet that he put out over the weekend. And we'll see if there's any sort of a major reaction in terms of the dollar moves. We're not seeing that much of it tonight. Coming to the GDP shocker, 5.4% versus estimates of 6.5%. Now, the question is how much of this is in the price, because corporate earnings have been talking about this in any case when we know there's a corporate slowdown that is underway. But even then, having said that, the expectation was about 6.5%. You've come in at 5.4%, and we'll get into the reasons why. It's largely an industrial and manufacturing-led slowdown. There are 3 key questions that this data is throwing up. Number one, is the slowdown transient because of monsoons and lack of capex, and government spending, etc.? Will the RBI relent earlier than what the market had in mind? No one was really looking at a realistic possibility of a rate cut coming this Friday, but is it on the table? And number 3, will we see more anti-dumping duty action? Because, you've heard this on the channel, sectors like steel, sectors like solar glass crying out for more protectionism. And tell you what, the CEA notes this. In the press conference, he did mention that there's a lot of dumping of specific commodities and industrial goods happening in India. So will the government take more action? So let's watch out for some of these sectors. These stocks could be in focus as well. The 10-year bond yield ended Friday at about 6.775%. So let's see what the bond market's immediate reaction is at 9 o'clock. Will the bond market now start factoring in a rate cut as early as Friday? And that will, of course, have a bearing on how bank stocks are doing today. So watch for banks. On the FPI flows bit, numbers are still very, very patchy, one would just have to say. Now, look at what happened on Friday. Remember, on Thursday, we said it's an expiry impact, and therefore we had a massive sell number. But Friday's number was not offering any additional confidence because they were still selling off about 4,400 odd crores. Domestic institutions were net buyers. The reason we had a nice pullback on Friday is because of the DII buying. Look at the DII number, 5723. So nicely offsetting the FII sell impact. That was Friday's picture. But I mean, if you pull back and see what's been happening, yes, November has seen a slowdown in the intensity of FPI selling. One would have to take that kind of, on the table as well. 90,000 crores of selling in October. In the previous month, it has come down. And finally, last but not the least, we're starting December. So will Santa Claus come to town? Santa has missed most of the Asian markets. It's been all about American exceptionalism. So as I wrap up, let's put the numbers on the table. I mean, can you imagine the Russell 2000 has rallied 10% in the month that's closed in November? So will these trends, the strong, outlook on the US market, will it continue in the end of the year period as well? Contrast this with Asia. We're flat. So are markets like Japan. But I mean, it's better off than something like a Hong Kong Hang Seng, which is down 5.5%. Kospi is down 5% in November. So Asia has been absolutely left out in the cold. Let's see if Santa decides to give us a bit of a cheer as well, Nigel.
Well, that's right. And the GDP print was a bit of a shocker, right? But it could make the RBI, force them to do some kind of action. Maybe not a rate cut, but maybe some kind of bond purchases, or maybe, in fact, a CRR tweaking is something that we could see. So because of this poor print, maybe you'll see that RBI may have to force his hand. That's, I think, what the street will be working with from here on. The resistance, though, comes in at those levels that we did hit last week, which is around 24,350. Positioning, the FIs, they continue to remain net short. 67% of their positions are on the short side. Even in absolute contracts, the FIs are net short, while the clients are net long. And that has been the case for the last couple of series or thereabouts. Moving to the options data then, we have two strikes that were fairly active. 24,500 call and the 24,000 put. Both of them were fairly active in Friday's trading session, which gives us the broad range we're looking at. And that perfectly tallies in with what we saw in terms of a low on Friday and we saw in terms of resistance for the past week itself. So the low that we saw on Friday was at around 23,927 approximately, which tells you that 23,900 mark becomes crucial on the downside. On the upside, you'll get more confident once we get past this 24,400 mark, because last week we went numerous times to this range and then we saw some bit of resistance. The Nifty Bank had a decent session in Friday's trade. It ended mildly higher. But in fact, if you're looking at levels, reference points on the downside, I think this 51,500 mark becomes important as the first level of support. So that's going to be the crucial level. 20, 50 and 100 EMA up for you in the screen. Looking at two stocks. Home First, it's been under pressure in the last 1 month or so. It's relatively underperformed. And now we have a large trade that will take place. Close on 15% equity gets out of the way. So that's the first stock I'm looking at. After it starts off in the red, let's see whether or not there's a recovery. Point number one. Point number two, we're looking at Adani Ports. They had an investor meet. And you had Nuvama that came out with the note. They have an aggressive price target out there because of the guidance that's given by the management. So keep an eye out on both these two, Home First Finance as well as Adani Ports.
All right, Nigel, thank you very much for that.